Maggie Schilling, who is the Program Manager for the Federal Transit Administration's National Transit Database. The NTD collects financial and service information from over 2,000 transit agencies across the U.S. and drives the apportionment for over $8 billion in federal formula funds. And as you know, most of you, that it's divided into rural and urban, and tribes report with a separate file, so that there's they have a different reporting sheet. Prior to joining FTA in 2014, Maggie spent 6 years at the Chicago Transit Authority, focusing on budget and performance management and overseeing transportation data analysis and process improvement out of the Chief Operating Officer's office. That's a lot of O's. Maggie is a graduate of University of Chicago. And with her today, the program manager for the NTD is Murtaza Naqvi, and he is, Naqvi, there we go, is a transportation data analyst with FTA and shares responsibility for managing the National Transit Database Program. The NTD collects financial service information, as we said before, and drives the apportionment. Prior to joining FTA in the spring of 2018, Murtaza spent 4 years measuring resource use for business activity across heavy-duty on-road vehicle and aircraft. Murtaza is a graduate of Western State Colorado University. Super. And then if something gets really complex and Murtaza or Maggie needs to call a friend, Joe Eldredge is the National Transit Database Operations Center Manager, and he supervises the NTD Operations staff, overseeing data validation and technical assistance for all NTD reporters. Before this, Joe worked as a data analyst reviewing and validating reports submitted to the NTD by 5311 program recipients. He also worked in University Transit as a bus operator and trainer. Joe is a graduate of the University of Virginia, where he studied systems engineering. Woohoo! So with that, I hand it over to our FTA team. Thanks.
I just changed the presenter, so you can share your screen, Maggie.
All right, you should see our screen now. Thank you for joining us. As Kara and Robin mentioned, I'm Maggie Schilling. I'm the program manager for the NTD. I'm going to jump into the presentation. We're going to go over a quick overview of the NTD. Then we're going to walk you through an overview of the rural programs. We'll talk a little bit about the formula impacts for rural and tribal reporters. And then we'll talk through upcoming changes to the NTD and address some questions. So quickly, just to give you an idea of how we're going to present this, I'm going to talk through the first point, the overview of the NTD. Then I'll pass it off to Murtaza to talk through an overview of the rural program. You'll hear from me again on the formula impacts, and then Murtaza will talk about upcoming changes to the NTD. Finally, we'll open up to questions. I will walk through the questions that we received in advance, and then we'll open up to any additional questions you might hear from any one of the three of us, me, Murtaza, or Joe, as you ask your questions specifically. All right, so jumping into an overview of the NTD. So the NTD, it's codified in transportation law, is actually section 5335. Sorry, we seem to be a little bit on a delay here from where I'm talking. I'll try and moderate to what you see. It's codified in law in section 5335 of the transportation law. The language related to the National Transit Database basically says three things. One, any recipient or beneficiary of 5307 or 5311 funds has to report to the NTD using a uniform system of accounts to be eligible to receive formula funds from the FTA. In MAP 21, an additional clause was added that also expanded the NTD asset inventory reporting and required all NTD reporters to report details on their assets and condition assessments for those assets. At the same time, there was language included in transportation law authorizing the transit asset management rule. So as you will see, we'll talk through this a little bit as we get into the changes farther in this presentation. The transit asset management rule, we will be collecting data that is related to TAM through the NTD, notably the performance targets. And so The TAM rule for the first time will require 5310 subrecipients to begin reporting to the NTD for the assets that they use in public transportation. So it will be the first time that 5310 subrecipients are reporting information in through the NTD. They will not be required to report any of the detailed financial information, as most NTD reporters are. They'll only be reporting on their assets. The other point to note about this is that all eligible public transportation may be reported to the NTD. Recipients and beneficiaries of 5307 and 5311 are required to report to the NTD, but there are agencies that report voluntarily to the NTD if they are running eligible public transportation service, and that public transportation can be used to drive formula funds either for an urbanized area or for a state. All right, so the NTD is divided into 3 modules. We have an annual module, and that is where we get an annual report from all of our 5307 recipients and all of our 5311 subrecipients. It's also where we will begin collecting that asset information for 5310 subrecipients beginning this year. We also have a safety module. Detailed safety data reporting is required for any of our urbanized area reporters with more than 30 vehicles in maximum service. We also have a monthly reporting module. The same group of individuals are required, so none of the 5311 subrecipients are reporting detailed safety data or detailed monthly data. That is only for those agencies that are in urbanized areas with more than 30 vehicles in maximum service. So this is a quick look at what we collect in the NTD today. The last report year for which we got information is 2017. So what you're seeing here is our 2017 reporters. We had 920 urbanized area systems. 384 of them were fewer than 30 vehicles in maximum service, so they are submitting a reduced report to the NTD. We had 536 that were submitting full reports. And for our rural reporting population, we had 54 states, 131 Indian tribes, and those 54 states and territories, what I should have said, are reporting on behalf of just under 1,300 subrecipients. Sorry, I'm having a little pause here in my screen. Oh, all right. Okay, so this slide is showing when agencies report to the NTD. We basically have 3 deadlines for NTD reporting, and it is based on your own fiscal year end. So the first deadline, if you are a July to June fiscal year, you would submit your report to the NTD on October 31st. If you are an October to September fiscal year, basically that federal fiscal year, you would report to the NTD by January 30th. And if you are a January to December calendar year fiscal year, your report is due to us by April 30th. This is roughly 4 months from the close of your fiscal year, and you can see there in the right-hand column how that breaks down for us. So just a little over half of our reporters are actually summer to summer fiscal years, and so they're reporting in October. That's when we get about half of the reports to the NTD. The January reporting pool, about 15% of our reporters, and then the final 30% come in April. Okay, so how do we use the NTD data? All right. Sorry, I've got myself on 2 screens. I'm trying to make sure I don't talk before you guys see the slide, but there's a slight delay from when I hit next and when you see it. So NTD data is used in a variety of ways. As Robin mentioned in our introduction, the biggest piece of this is that it drives the annual apportionment of FTA formula dollars. Last year, we apportioned just a little over $9 billion. We also use NTD data to do safety reporting and trend analysis. So our transit safety office here at FTA uses it. We make that data available on our website in a rolled up sort of overview format. The detailed data is available to people if they request it directly from us, but it's used for any sort of safety and trend analysis. There's also several government reports that are required by Congress that use NTD data. One of them is the Conditions and Performance Report. It's a biennial report that we do in conjunction with Federal Highways. It's huge. You can find it online. It's good nighttime reading if you can't get to sleep. But there is lots of interesting data in there. And so we produce that every 2 years, and it is largely fueled by NTD data. We also have a few Government Performance and Results Act reporting. We call it GPRA here at FTA, but there are different Performance and Results Act reporting that's required for the Secretary's Office from FTA, and so we use NTD data to help fuel that as well. One of the other things that it's used for that's not listed on this slide is NTD data also helps us when reauthorization comes around to make a case to Congress for how much funding is needed to support transportation in the United States. And so this data is very important. And we know that it is difficult for people to report this every year. It's a big lift, but it actually does fuel some pretty important things here from the federal side. We also make that data available on our website every year as a resource for industry. So people use it for service planning. They use it to do peer comparisons when they want to benchmark and see how they're performing against comparable agencies across the country. Lots of academic and research institutions use the NTD. We field questions on that quite a bit. And then the National RTAP has the INTD tool that's made available to any rural reporters for their use to help navigate through that data. Okay, at this point, I'm going to turn over to Murtaza to talk you through some of the rural reporting requirements.
All right, hello everyone. My name is Murtaza Naqvi, and in this next section, we're going to discuss NTD reporting requirements for rural reporters, detailing specifically financial and service data requirements. Okay, so the accounting structure required by federal transit laws seek to ensure uniform data definitions for all transit agencies. The Uniform System of Accounts, or USOA, is the basic reference document for the accounting structure required by federal transit laws. The NTD uses uniform categories to collect financial and operating information through reported data, which is to be developed on an accrual basis of accounting. What we mean is an agency's accounting records should either be maintained on an accrual basis or those records should be translatable to the uniform principles prescribed by federal transit laws. The takeaway principle is that actual transactions and events should be recorded in an agency's financial records, and agencies should record expenses incurred in the same period in which they recognized the related revenue. This first example prescribes how revenue should be recorded when it is earned regardless of when payment is received. If a passenger purchases $10 worth of fare on a card, upon boarding the bus scans their card and uses only $5, you would report the fare as revenue when the customer redeems the ride, not when the medium is sold. The second example illustrates how expenses should be recorded once the liability is incurred, regardless of when the payment is made. Say an employee receives a paycheck 10 days after it was issued and the check's receipt date happens to be in the new fiscal year. You would report this liability when the paycheck is issued and not when the check was cashed. A final verbal example will help us look at the receipt of federal, state, or local funding. When agencies apply for these funds, the government entity approves the application and makes a funding commitment for the total amount of funding. Transit agencies must report the amount of funds spent during the year as revenues earned and not the amount of funding that has been committed. Now that we're familiar with the accounting requirements, we will dive into expense reporting in the NTD. The NTD separates expenses into two major categories: funds expended on operations and funds expended on capital. Operating expenses are expenditures that a transit agency incurs during day-to-day operations in providing public transportation service. Operating expenses first comprises all activities related to revenue vehicle operation and maintenance activities, including dispatching, scheduling, ticketing, fare collection, fueling, servicing, inspection, maintenance, repair, and all administrative functions for revenue vehicle operations and maintenance. Operating expenses also comprise service and maintenance of service vehicles, equipment, and facilities. Finally, operating expenses should also capture expenditures related to general administrative activities at the agency-wide level. Examples include customer relations activities such as developing, maintaining, and hosting a public-facing website. Another example includes expenses incurred for planning services or planning capital projects. FTA's updated Uniform Systems of Accounting publication provides detailed guidance to agencies on capturing operating expenses in your annual report. In order to report the total cost of delivering each mode of transit service, agencies must calculate both the direct and shared costs of providing service. Direct costs should be attributed and charged to the specific mode within an agency's accounting system at the time the work was performed, thus allowing the incurred expense to be easily identifiable to a mode, such as bus operator salaries and wages. Shared costs are costs that are commonly or jointly used to provide two or more modes of transit service. Common shared cost examples include salaries and associated benefits for agency-level management and office supplies that are used by individuals across multiple modes. Once shared expenses have been identified and separated from direct expenses, you may allocate the shared expenses based on an approved cost allocation method. Agencies may trace shared costs wherever feasible by recording resource use. Tracing shared costs will maximize accurate cost assignments. Agencies may also allocate shared costs based on a model that reflects the agency's cost structure. Each year, reporters should ensure that their allocation model is valid and that the allocation method is utilized consistently. Again, FTA's Uniform System of Accounting publication provides detailed guidance for reporting total costs. Capital expenses are the expenditures that are related to acquiring a capital asset or making an improvement to an existing capital asset, which materially increases the value or useful life. These are not ordinary day-to-day operations. Capital expenses may include improvements to existing service or expansion of service. The NTD defines capital as an asset having a useful life of extending beyond 1 year. Examples include vehicles, infrastructure, land improvements, building, and equipment. Capital expenses should include the cost of the asset and the cost to implement it. This is called the acquisition cost and includes the net price of the equipment plus any modifications or auxiliary apparatus needed to make the asset usable. OMB's Uniform Grant Guidance allows the transit agency to determine its capitalization level provided the per unit cost is $5,000 or less. An agency's capitalization level is the threshold at which an asset's acquisition cost is reported as a capital expense instead of an operating expense. When the cost of an asset is unknown, these assets are recorded at the estimated fair value at the time of acquisition. For example, if a transit agency sets its capitalization threshold to $5,000 and purchases a computer at $2,000, the computer purchase will be reported as an operating expense since the acquisition cost was under the capitalization threshold, even though the useful life of the computer may be 3 years. For vehicle-related capital expenses, agencies should report new vehicle-related expenses under the mode that the vehicle supports the majority of the time. Reporters must also provide service data to the NTD on an annual basis. Unlinked passenger trips are the number of boardings on public transit vehicles during the fiscal year. transit agencies must count passengers each time they board vehicles, no matter how many vehicles a passenger uses to travel from their origin to their destination. For demand response and demand response taxi modes, transit agencies must include personal care attendants and companions in their passenger counts, as long as the accompanying passenger is not an employee of the agency. For van pool service, agencies must report the driver as a passenger and include the driver in the passenger trip counts in cases where the van pool driver is unpaid and is traveling for personal reasons. The takeaway principle here is that transit agencies must include sponsored unlinked passenger trips as part of their total unlinked passenger trip count. What is sponsored service? Sponsored service is paid in whole or in part by a third party who, in many cases, handles trip arrangements. These services are considered public transportation if they are part of a coordinated human services plan. Examples of common sponsored services include the VA, Medicaid, Meals on Wheels, Head Start, or the ARC of the United States. Reporters should remember that your total unlinked passenger trip count is the number of boardings on regular trips plus the number of boardings on sponsored trips.
Okay, thanks, Murtaza. Now I'm going to jump into speaking on the formula impacts of data that is reported to the NTD. Okay, so here we have the flow chart for the 5311 formula. This is pretty busy, but I've tried to draw your eyes to the areas that are most important. There are essentially three places where NTD data shows up in the 5311 formula, and they are all related to vehicle revenue miles. You can see here these little red circles in the apportionment to the states under the, so about 83, a little over, % of the 5311 formula funds that are apportioned to the states are doled out based on the land area and non-urbanized population. When you go over to the right, just under 17% of those funds are doled out using either land area, vehicle revenue miles, which comes from the NTD, or non-urbanized low-income individuals. When you move over to the right, this is where you see the tribal formula, and we'll get into this as I move along, so I'll talk about tribes a little bit more, but you can see there are 3 tiers to tribal formula program funds, and 2 of them are driven by vehicle revenue mile inputs that are collected through the NTD. So what this means, most Section 5311 funding is based on population and land area, so the NTD doesn't really impact those 2 inputs. That's where the states get the majority of their funding, and again, it doesn't matter how much service you put out, population and land area are going to drive the bulk of the funding that you receive. The other formula inputs are those vehicle revenue miles, and that is collected through the NTD, and then your low-income population. So here we take a closer look at the tribal formula. So the tribal formula right now is $35 million a year, $5 million of that discretionary, $30 million in formula. There are 2 tiers in the tribal formula that are based on vehicle revenue miles. So you see over on that right-hand side of that $30 million, about 50% of it is doled out evenly amongst the tribes based on the vehicle revenue miles that they report into the NTD. Another 25% is equal shares among tribes with at least 200,000 in vehicle revenue miles reported to the NTD annually. So that's essentially a bar. Once you meet it, you get into that tier and you get a portion of those funds. If you do not provide more than 200,000 vehicle revenue miles, then you would not be eligible for Tier 2 formula funds. The real takeaway to this means that this funding is based on how much service you put on the street. There's often a misconception that ridership drives our formula program, but really it's all about the service that you're providing. So more service on the street equals more funding in the formula. The final tier of the tribal formula is that 25% on the end, and that is given to tribes with over 1,000 in low-income individuals served on tribal lands. This is something that I guess it adds up based on the amount of tribal lands that you have. So it does behoove you, if you serve more than one tribal area, to report all of those to the NTD because low-income individuals that are located on each of those tribal lands can help you get over that 1,000 bar to get into the Tier 3 formula funds. So, as I said before, Tier 1 is based on vehicle revenue miles collected by the NTD. Tier 2, again, based on vehicle revenue miles, which is also collected through the NTD. And then that Tier 3 is all based on the tribal areas that you're serving with more than 1,000 low-income individuals. Some special situations to think about for tribes. So tribes serving the same land area, money that is given out to tribes is apportioned to the land area, much like it's apportioned to an urbanized area or a state. So in certain cases, tribes will be serving the same tribal area, and they have to agree on the split. There was an amendment put into FAST Act, so now this is part of legislation, that if tribes are unable to agree on how to split that apportionment to the tribal area, the money can be apportioned based on each tribe's percent of the unlinked passenger trips. Another special situation for tribes is that tribes contracting for service delivery can report that service directly to the NTD. So typically we don't allow people to report sponsored trips into the NTD directly. They can only report service that they pay the full cost for. And tribes, because the tribal formula is located in a separate area in the formula apportionment, it is a place where we allow tribes, if they are subsidizing service. So let's say there is a city that's adjacent to the tribal area, and the tribe pays the city's public transportation provider to run a bus onto the tribal land area to serve that area, and they don't pay the full cost of that service. It's truly just a subsidy. We do allow the tribes to report to the NTD that subsidized ridership and vehicle revenue miles. So they will receive credit for VRM that's purchased. Okay, that was a pretty quick one. Now I'm going to turn it back over to Murtaza to talk through upcoming changes to the NTD.
Thank you, Maggie. In this next section, we will discuss updates to the NTD, including reporting system and forms, import and export, USOA, financial reporting, and transit asset management reporting. Agencies can now import and export their form data directly into and out of the NTD system. This functionality utilizes an Excel template in both directions. Excel templates are available for each individual form and are designed to mirror report forms in the system. All fields in the report form have corresponding fields in their respective templates. This functionality streamlines the data entry process and allows for reuse of data templates and even creation of software to dump data into templates. It allows for bulk uploading rather than individual data entry. Templates, though, are built with data constraints, which will minimize issues and can potentially reduce time spent on validation. NTD encourages the following best practices when using import-export. Enter your data directly into templates as you would in the reporting system. Follow NTD's existing uniform data quality constraints by entering whole numbers without decimals and not entering negative values. Reporters should always keep exported data saved for your records. Prior to report closeout, reporters should export the Excel workbooks for record keeping as well. For data values that have not changed, retain and refer back to the data in your final templates the following report year. The import function uploads a completed Excel template into the reporting system. Users may import as many times as needed, but should be aware of their data versioning and follow data requirements for each import. Reporters are, though, encouraged to reach out to your analyst for additional guidance on this new functionality. As stated before, the Uniform System of Accounts, or USOA, is the basic reference document for the National Transit Database. It contains accounting structure required by federal transit laws. FTA implemented minor structural changes to the accounting and reporting system requirements which are now published in the USOA. Reporters will notice a change in the RR20 form. Rural public transit operators are now required to report fair revenue expenditure by revenue type in the RR20 form. The objective is to capture passenger paid fares separate from organization paid fares. Donations were previously captured as non-federal revenue source and will now be reported to the other directly generated funding line. Previously, rural agencies reported fair revenue expenditures from fair revenues. Now, these expenditures are broken out by who paid the fare. Organization paid fares typically result from agreements between the reporter and another organization. The other organization pays a set amount for unlimited or reduced fare transit service for persons covered under the agreement. Please note that a payment by an organization would have to be made on a per-trip basis for it to be considered an organization paid fare. A common example is a university paying a transit agency to permit its students to ride free on its vehicles after showing a valid student ID. In contrast, passenger paid fares reflect the amount of fare that a passenger pays on their own behalf. Fare revenues do not include subsidies or fare assistance paid on a non-ride basis. Donations were previously captured as a non-federal revenue source and will now be reported to the other directly generated funding line. Rural agencies were also previously instructed to net out insurance payments, noting it as a source of revenue. Now these payments can be reported on the RR20 form. Instead of being netted out, insurance payouts will be reported as other directly generated funds. These revenues include insurance payouts, dividends, rebates, and funds that may be netted out towards future bills. All right. The NTD program's asset inventory module is designed to collect basic information on assets and infrastructure used by transit agencies to deliver service. The Transit Asset Management Rule, or TAM, set out minimum asset management practices for transit providers. Agencies that receive or benefit from Chapter 53 funding from the Federal Transit Administration are required to report an asset inventory, condition, and performance assessments to the NTD. Reporters will have noted in last year's report the expanded asset inventory. Those are the A forms. The completion of the asset inventory is mandatory beginning this year. In 2017, agencies set their performance and condition targets for 2019, and in this report year are required to report those targets into the NTD. Condition and performance assessments for the first quarter of your assets are due with the 2018 NTD report. Narrative reports, which are documents that detail changes in transit system conditions and progress towards achieving performance targets, will be due in the next report year. Historically, the NTD collected basic asset information from transit agencies on revenue vehicles, facilities, and stations as part of the annual report. With the introduction of TAM, the NTD now collects more detailed information on maintenance facilities, administrative buildings, passenger stations, revenue vehicles, and service vehicles. This table being presented provides an overview of what assets are to be inventoried and the performance measure that is to be collected. Transit agencies are required to inventory assets for which they have direct capital responsibility. Agencies have direct capital responsibility if they fully or jointly own the asset, or transit agencies have capital capital responsibility for the asset that they are responsible for replacing, overhauling, or refurbishing. An example is that if there's a capital line item on the agency's budget for overhauling and major repairs to revenue vehicles, the agency maintains capital responsibility for those assets. Agencies are required to report on capital assets that they have direct capital responsibility in the fiscal year in which the agency begins using the asset for public transportation service.
I'm going to jump in with one quick clarification here. So capital replacement responsibility, as you can see in this table, the passenger stations and facilities and the maintenance and administrative facilities, you're required to report condition assessments for any of those for which you have capital replacement responsibility. The passenger stations and the revenue vehicles, you have to report into your inventory regardless of whether or not you have capital replacement responsibility, but you're only required to report a condition assessment for those two categories if you have capital replacement responsibility. So the quickest way to think about this is if you use it in public transportation service directly, your passengers see it, your passengers interact with it. We need it in the inventory. Those are your stations and those are your revenue vehicles. The other two categories, your maintenance and administrative facilities and your service vehicles, essentially the bar for reporting them is the same as the bar for having a condition assessment or a useful life benchmark for them. If you have capital replacement responsibility for an administrative or maintenance facility or a service vehicle, you have to report it to the NTD in the inventory, and you also have to either provide a condition assessment if it's a facility or a useful life benchmark if it's a service vehicle.
Great, thank you for the clarification. Yes, indeed, performance, for the clarification on the performance measures. So digging into the performance measures, beginning in report year 2018, agencies are required to report their 2019 transit asset management performance targets on assets which they have capital responsibility. Transit agencies must report targets for revenue vehicles, service vehicles, infrastructure, and facilities. Agencies should base their rolling stock performance targets on the percent of revenue vehicles that will meet or exceed their useful life benchmarks. Individual targets must be set for each vehicle type reported across all modes. Equipment performance targets should be set on the percent of service vehicles that are expected to meet or exceed their useful life benchmark. Targets are set by vehicle type. Equipment performance targets are not required for assets owned by an agency which are not service vehicles. Facility performance targets should be based on the percent of facilities that are rated below 3 on the condition scale. Additional guidance can be found in the Asset Inventory Reporting Manual and the Transit Asset Management Condition Assessment Guidebooks, all of which can be found on FTA's website. So for report year 2018, agencies are required to report their 2019 performance targets. Starting this report year, agencies are also required to report useful life benchmark performance measures for revenue and service vehicles in their inventory. Also beginning this year, 1/4 of facilities under capital responsibility will require a condition assessment in the reporting system. Narrative reports will be due for upload into the NTD in 2019. These reports are meant to provide the medium for agencies to outline performance targets and the progress being made towards those targets. The narrative report may also include details for any changes in transit system conditions that impact progress. There is no prescribed format for the narrative report. Every agency must report a transit asset management plan to the TAM program if it owns, operates, or manages capital assets used to provide public transportation and receives financial assistance as a recipient or subrecipient of Section 53 funding. The TAM plan should outline asset management policy and goals while advancing asset management, planning, budgeting, and communication practices to both internal and external stakeholders. Group plans can be developed by a sponsor on behalf of agencies that operate less than 100 vehicles in maximum service across its fixed route modes, or operates less than 100 vehicles in maximum service in any one of the non-fixed route modes. State DOTs are required to sponsor a group TAM plan for all of its Tier 2 provider subrecipients, except for those that are direct recipients of Section 5307 Urbanized Area Formula Grant Funding. Tier 2 providers may choose to opt out of a group plan, but are still required to submit a TAM plan. What does the TAM plan mean for the NTD? A state sponsor will manage TAM requirements within the same method as current subrecipient reports. The appropriate asset inventory forms will be added to the state's report package for each subrecipient. If your agency reports directly into the NTD, then you will also directly report the asset inventory in your annual report. Section 5310 asset-only reporters will be managed within the state's report package. One A90 form will be completed by the sponsor for the entire group in a group TAM plan.
All right, thanks, Murtaza. Now we're going to jump into the questions section. I'm going to start with questions that we received in advance. We'll walk through those with the answers to all of those questions. I will tell you how you can get in touch with us, where you can get more information if you have questions, further questions, and then we will open up to the group if questions are coming in for us to address. We still have time. It looks like we definitely will. Okay, the questions we received in advance. So the first question we received was related to the schedule for updates to the rural NTD. The answer to this is basically any updates to the NTD reporting are rolled out at the beginning of each new report year. As you saw before, we start getting reports in October. The end of October is the first due date. So we basically open up the NTD system in September, and that is when you'll see any changes to the NTD implemented in the system. If there are changes, updates will usually be published through the Federal Register for notice and comment in advance, well in advance of when they take effect and when you see them in the NTD. So keep an eye out for that. We welcome your feedback to any of our Federal Register notice policy changes and would love to hear that feedback. So you can get in there, you can comment, and that will help inform the changes to the NTD each year. The next question we got was related to how NTD calculates the cost per ride for subrecipients. So our cost per ride is calculated as total operating expenses over total unlinked passenger trips. Pretty straightforward. These two data points are available in the NTD. You can use the data products we published to our website to find them for any of the agencies and calculate this for yourself. The next question was related to entities who receive funding other than 5307 or 5311 and asking whether they're required to report ridership to the NTD. Right now, I spoke about this in the very beginning of this presentation. Only agencies receiving 5307 or 5311 funds are required to report ridership to the NTD. They, in fact, have to report all of their NTD data to the NTD. But agencies that provide public transportation service and are not recipients of 5307 or 5311 can report to the NTD on a voluntary basis. Okay, so the next question we received was, if an agency does not receive 5307 or 5311 funding, would they be able to recoup any funding through the capital cost of contracting if they operate the service themselves or if they contract it out to a private company? So FTA funding is generated by the state or the UZA. So we dole out the money to either the state or an urbanized area, or in the case of tribes, to a tribal area. Allocation of how those funds are used is a local decision. So once we provide the funding to the state or UZA, whoever the designated recipient is there, they will mediate, the process of handing out FTA funds to all of the different agencies and public transportation providers that are eligible to receive those funds. An agency may be able to receive 5307 or 5311 funds for eligible public transportation activities if the state or designated recipient provides those funds to them. It's a long answer to basically say, yes, you could recover it and use it for capital cost of contracting, but again, that would be a local decision about what money would be available. We do have some additional information on capital cost of contracting on the FTA website. I would encourage you to go there. It's transit.dot.gov. If you do a quick search for capital cost of contracting, you'll find some additional guidance there. If you would like, at the end, you'll have my email address, you'll have Joe's, you'll have Murtaza's. If you have more specific questions, you can also email us. Are there any templates for the accident or incident electronic database similar to the SNS 40 used to post information to the NTD? At this time, we do not have a template available for SNS 40 forms. We did discuss this, however, so this question did sort of ping us to consider creating that type of template, or at least something that would allow an individual that's interested in safety reporting to see the different data elements that we currently capture in the SNS 20. So stay tuned. You may see that crop up on our website soon. All right. Next question was, how is the apportionment affected when an agency receives both 5307 funds and 5311 funds? All right, so services reported to the NTD is either urban or rural based on SERV rules. The SERV rule basically says if a trip begins or ends in an urbanized area or a rural area, the full amount of service associated with that trip, so the ride, the vehicle revenue miles associated with that trip, can be allocated to either the urbanized area or the rural area. So as long as at least one end of that trip exists in the urbanized area, it can be allocated to the urbanized area. If at least one end of that trip exists in the rural area, it can be allocated to the rural area. Each agency will report how they are allocating their service based on those SERV rules. And then the service is allocated to the UZAs or rural area based on the way that agencies are reporting it to the NTD. So the short answer for this is you decide how your service fuels the funding in the NTD if you provide both 5307 trips and 5311 trips. The next question asked about tribal subrecipients who receive both tribal transit funds and funds from the statewide 5311 apportionment. How do those numbers factor into the apportionment of 5311 funds? So tribes receive credit for all of their service in this tribal formula program. So no matter how they report it, they will receive full credit for all of their service. Tribes also divide their service by state and UZA, and then it is allocated in the same way I discussed before. Whatever a tribe reports as state service will be put into the 5311 formula. Whatever they report as urban service will be put into the appropriate urbanized area in the 5307 formula. And that is how it works. So that concludes the questions that we received in advance. I'm going to walk you through where we have some additional resources available to you. We have training each year. The NTI, National Transit Institute, holds 10 in-person trainings on NTD urban reporting each year. We have a number of webinars that we hold. NTD also holds approximately 10 webinars. These are, again, usually hosted through NTI, and they focus on safety reporting changes, typically in December. Tribal reporting, we'll have one in the fall, one in the spring. Rural and reduced reporting, again, a fall and a spring session. And then we will have any upcoming program changes, typically in the summer before we roll out the database beginning in September. So keep an eye out for those. You can find also if we are scheduled to present at any conferences, and all of that can be found on our website, transit.dot.gov/NTD/trainings and conferences. Another resource that I would encourage you to look at are our policy manuals. So this year we've rolled out a standalone rural and reduced reporter policy manual. Before we just had one, and so if you were a poor rural or reduced reporter, you had to pick through that full policy manual to find the things that applied to you. We've tried to get rid of some of that dirty work for you. So now we have one full reporter manual, a rural and reduced reporter manual, and then we have a safety manual for those agencies that are required to report detailed safety data, and then also information on how you report your annual safety data to the NTD. Again, here is the link for where you can find those, transit.dot.gov/NTD. If you get there, you can find everything else, but if you also hit /manuals, you'll get directly to the manuals. Some other resources we have available. Murtaza talks through the new asset inventory requirements. We have a section on our website that deals directly with the new asset inventory module. There are some really helpful webinars on there. I believe Courtney Springer, is that her last name? Courtney Springer is the voice of that webinar. So if Courtney Springer is your analyst, you will recognize her voice on the asset inventory module reporting webinar. She basically walks you through how to use that new asset inventory module. We also have copies of any of our public presentations and recorded webinars that you can look through. So I encourage you to peek through those. We will link when RTAP posts this webinar. We will also put a link on our website so you'll be able to find it through there as well. Okay, and here is, there we go. Here is the slide that may help you the most. This is how you find all of us. So if you have any questions, you're welcome to contact me or Murtaza directly. Joe is our Operations Center Manager, so he works day-to-day with all of the analysts. You're welcome to reach out to Joe as well. And then if you don't want to reach out to one of us because you feel sort of nervous, you can go through the help desk. It's a little bit more anonymous there. We can help anyone. You will be connected to an analyst. It is available 8 a.m. to 7 p.m. Eastern Standard Time, so even if you're on the West Coast, we will still be able to help you. Not perhaps all the way till your close of business, but pretty close to it. And again, there's our website at the bottom, transit.dot.gov/NTD. And that concludes what we have for you. So we will wait to hear if there are any questions coming in from the audience.
Thank you so much, Maggie and Murtaza. You covered so much, but there are a lot of questions. So a lot of them were answered through the questions tab, but I'm just going to read the ones that don't have an answer yet, and I will try to type up a summary of your answer as you speak it, so it will be available for the webinar attendees. Okay, the first question: is it possible for you to create for state dots to have the option to download reports pertaining to their demography, as the option isn't available now? It would be neat to have an option like that so all providers' data can be downloaded by topic or area.
Okay, so we do not yet have this functionality available. We will definitely put this on our list for consideration and see if there's anything we can do. But right now, unfortunately, we don't have the ability to provide information in that way.
This is Robin, and I wanted to just mention that RTAP does have a project out to have the people who are doing INTD do one that you can do comparisons with, so that you would be able to find agencies with like size or like size communities, and do sort of apples to apples or fruit to fruit. And that should be coming out in the next 6 months.
And what is that called, Robin?
It's called the comparison tool, and it's through the INTD, and Florida International University is working on that, and they manage the NTD data.
A comparison tool through the INTD.
Yes.
Okay. Great. Okay. Next question. All righty. Next question. Can you please explain more about linked and unlinked?
Yeah. So I addressed this a little bit in the answer there in the question panel. But basically, unlinked passenger trips count passengers once each time they board the vehicle, whereas linked trips don't. They don't distinguish between boarding. So regardless of how many vehicles the passenger uses to complete his or her trip, a linked trip would count that person once. A passenger trip would count you each time you boarded a vehicle. The NTD doesn't collect linked trips. We only collect unlinked passenger trips on the service forms and on the reduced reporting forms.
That was also Joe Eldredge coming in stealth, introduce himself, but
Sorry. Okay. Now the next question is about the P20 being completed prior to the A30 form. My question about that is during NTD reporting for state dots on slides 62 to 70, explain more clearly whom reports and forms they need to complete, what reports and what forms they need to complete. The first answer in respect to A15 and A10 forms isn't consistent to training that was received earlier. Is that something?
Yeah,
that,
I'm not sure what the training received earlier references. There was a little back and forth about how you actually get forms to generate on your subrecipient report. So a state DOT needs to report per subrecipient 4 forms: the A10 form, A15, A30, and A35. And in some cases, there may not be service vehicles or revenue facilities to report on the A15, in which case you could just leave those forms blank. But revenue vehicles are required from everyone, essentially. If you're operating public transit service, that means you have revenue vehicles. I think part of the confusion here just surrounds the word revenue. So we don't always mean that that vehicle is generating revenue. It is just carrying passengers in what we call revenue service. So if you're providing shared ride public transportation, you have revenue vehicles. Hopefully that answers that. My colleague is reminding me here the B10 and RR20 are also required for reduced reporters. Reduced asset reporters, if we're talking about 5310 operators, do not need to report the RR20 form. If you have more questions about this, I'd recommend contacting your signed NTD analyst.
So basically summarized it and said for more clarification, contact after. Okay, so the next question is, how do we determine the capital replacement assets? What if they don't want to replace or apply for funds with that?
So
how do we determine capital replacement assets? But what if they
So I
don't
guess
want to replace?
if they don't want to replace the asset, how do they deal with it? So if they're retiring an asset, they would take it off of their report is the easiest way to say how you would deal with it. You would retire a vehicle, and so the form will allow you to indicate that the fleet is retiring. If it is a facility, Joe, remind me if the facility, does it also work the same way, or do you just remove it from the form?
You can remove it from
Yeah.
the form.
So you just remove it. So if you have a facility that you've been reporting and it is now the end of its useful life and you decide you're no longer going to keep it in service, you can delete it from your NTD report. I hope that's what they were asking.
Okay. Okay, next question. Some of the providers haven't received funds to maintain facilities, and they're supposed to report about their facility's condition. This person wants to understand this as much as possible, as the providers haven't received FTA funds to maintain facilities.
Could you repeat that one more time for us, Kara?
Sure. Some of the providers have not received funds to maintain facilities, but they are supposed to report about the facility's condition. The person who asked this wants to understand this, what to do if the providers haven't received FTA funds to maintain facilities in terms of NTD reporting.
So the requirement is that you have to report all of your facilities, vehicles, any asset that you use in public transportation service. As I mentioned before, any of your revenue generating vehicles or any of your passenger facilities, if they meet, so in our guidance, we do specify what is considered a passenger facility. We're not looking for every bus stop. We're looking for things that are more like a bus transfer station or what would be a standard rail passenger station. So if it is a reportable passenger station, it has to be required on your, or it has to be included on your inventory and on your report. And again, if you have a service vehicle or if you have an administrative or maintenance facility that you have capital replacement responsibility for, you do have to include it on your report. There is not a requirement that it has FTA funds in it. The only requirement is essentially if you receive FTA funds for anything, 5307, 5311, you have to report to the NTD. These are part of the NTD reporting requirements, and so it isn't sort of a pick and choose. I'm only reporting the things for which federal dollars were used. It's truly any of the assets that you use in public transportation service. If you receive our funds at all, you're required to include them on your NTD report to be compliant with NTD reporting and to sign your certs and assurances as such when you receive grant funds.
Okay, so this person was saying they haven't received FTA funds, so I guess that.
So if they do not receive FTA funds at all for anything, for either operating or capital, then they would not have an NTD reporting requirement.
Unless maybe they have in the past.
Yeah.
Or in the recent past.
Okay. Next question. What is the criteria for inclusion and removal of Transit Asset Management TAM group plan participants? As some of the providers who aren't part of the current contracts were included when they don't have any current FTA assets and their liens are released.
Okay, so again, your requirement to report on your assets is not contingent on whether or not that asset has any FTA funds associated with it. It's truly contingent on whether or not you receive any FTA funds. So if you are receiving funds for operating assistance, then you have these NTD reporting requirements, including the assets. So this is something that people sort of get confused about occasionally, but reporting the asset has nothing to do with whether or not there's FTA money in it. It can mean, however, if you have an asset that was sponsored with FTA funds, and then you don't receive any more FTA funds, you are still required to report to the NTD for the useful life of that asset. So as long as you are continuing to actively receive FTA funds, or you have an asset in service in public transportation that was funded using FTA funds and is still within its useful life by the grant requirements, then you have to have a continuing report to the NTD during that time.
And that answers the previous question a lot too. Okay, next question for first-year reporters. How do the performance targets apply?
Okay, so a first-year reporter, yes, you do need to set targets because the target is based on TAM. So essentially at the point that you are required to create a TAM report, which is when you start receiving funds. So typically with the NTD, there can be a lag. People can start receiving funds and then they report at the end of their fiscal year to us. So by the time we get the NTD data, you've already received funds, you've already run the public transportation service, and then you report to us. Meaning that by the time you're reporting on NTD, you have already had a TAM requirement placed on you by virtue of receiving FTA funding in some sense. And so, yes, for the first year, you should have targets available to report with your NTD report.
Even the first year, okay. All righty, next question. In reference to the independent auditor's report, our tribe has the auditor's report for all programs yearly. Would there be a need to attain an additional report? And this is for a tribe.
So tribes are exempt from the IASFD. The only agencies that are required to report an IASFD on a regular basis, I guess once every 10 years, is full reporters and our rural reporters. I had a crisis of confidence for a moment, so I had to look around the room to make sure I didn't misspeak. So once every 10 years, agencies are required to submit a new independent auditor statement on financial data if they are a full reporter or if they are a 5311 subrecipient.
Okay, I got that tribes are exempt from, and then could you please say the acronym more slowly? ISSFD, is that correct?
Sorry, I misspoke on that. It is in fact just urban full reporters and reduced reporters.
And
rural subrecipients are not required to do an ISFD either.
And Carrie, yes, you have the acronym right. It's IASFD.
IASFD? Okay. Okay. Is it possible for us to have one single form for the provider instead of completing various forms and capture similar types of information? This is
At this time, we don't have the ability to consolidate an entire NTD report on one form to upload into the system. They are created essentially form by form because it's the way that it's saved in the database. There's some IT reasons for that. As we move on, my long-term goal, I'm not making any promises with this, but my long-term goal is to try and move this to an API where people can just send their data electronically to us and it will go into the system. It may take me a couple of years to get to that point with federal security requirements, et cetera. But for now, essentially the templates that we have was the best compromise we were able to get out of the structure of the system and the security requirements that we were working with.
Okay. Security. Next question. As a tribal provider with no connection with another tribal provider or transit agency, we would report TAM individually, is that correct?
Yes, so tribes actually have the most flexibility in reporting either on their own or as a group for TAM requirements. So tribes can create their own TAM report, or they can decide to create a group plan amongst different tribal recipients, or they could be a part of the state if they wanted, if they receive 5311 funds from the state. So there's a considerable amount of flexibility for tribes in complying with TAM requirements.
Okay. Next question. How should recipients report trips that have a start location in an urban area and an end location in a rural area, or vice versa?
So this speaks to the SERV rules that I mentioned before. The agency can decide to report that trip in either the urbanized area or the rural area. It is really at their discretion. I will say, I'm not encouraging this in any way, but in general, a trip earns more money in the urbanized area. If it is a large urbanized area, vehicle revenue miles, the per vehicle revenue mile amount generated is typically higher in the 5307 formula than it is in the 5311 formula. So agencies will often look at, what is their local relationship with the urbanized area? Are they receiving any 5307 funds? And then sort of decide whether it's in the best interest for them to allocate that trip to the urbanized area or to the rural area.
Okay. Next question. Okay, when is the next training for the NTD? I actually answered that question somewhere else, but if you can just answer, if you know the next webinar training date, I'll put it in chat.
Okay, give us 1 second. We will send that out momentarily. We're just going to pull it up on the website.
Okay, great. So we'll come back to that. Okay, where can templates or forms be found?
Right now, the easiest way to get to the templates is to download them directly from your report package. So they're available. When you navigate to each form, you will see an export button that will allow you to export a copy of the template. If you've already filled some information into the NTD, it also will export the data that you have already populated in the NTD. That's the easiest way. The reason we have not put just generic forms on the website is that it's actually a little bit complicated to do that. There are slightly different reporting requirements for each, not reporting requirements, but your report package looks a little bit different based on what modes you have available, et cetera. And so the best way to get at the templates is to go through your report and download them directly from the system.
Okay. All righty. Where can I find a copy of the Excel templates?
Same, that's actually the same question, I believe. You can find them in your NTD reports, the easiest place to download them. We do have a copy of the asset forms on our website. In that a few slides ago, I gave you the link for the asset module, or the place on our website where we host all of the information on the new asset inventory module. We do have some generic forms there. Again, I would still encourage you to use the forms from your package because they will already be formatted for your mode and type of service. We also have the upcoming trainings. Joe's going to talk you through them real quick.
Yeah, so I put this in the chat pod, Kara, but we've got on Thursday, the 17th of January, another reporting webinar just for state DOTs, and then the following Tuesday, January 22nd, for tribes reporting to the NTD.
Okay, and I'm sending that to everybody. Okay, great. All righty, so next question, can you please elaborate regarding the donation changes? Is there no longer a need to distinguish between onboard donations and other donations?
Yes, that's essentially correct. We've removed the distinction between onboard and other donations.
Okay. Next question. Thank you for clarifying my questions regarding, this is just a comment regarding facilities and reports. I will follow up questions at a later time. It makes sense to include assets that support public transit services. Okay, next question. RR20 reduced reporting. We have a contract with a senior citizen organization, and they ride free on any bus with their badge and have some say on where they go. Is that demand response, fixed route, or charter? In terms of
it sounds like it's likely deviated fixed route, but we would probably need a little bit more information on what type of service they're providing. I would encourage them for that type of question to either reach out to the help desk or the analyst directly. They can help you discern those questions pretty easily.
Okay. Somebody said API is going to be great. The next question, for subrecipients who receive 5310 and 5311 funds, is it on the subrecipient or the direct recipient to report unlinked passenger trips to the NTD? And are all unlinked trips required to be reported, or just the rural trips using 5311 funds?
Okay, so if they are receiving both 5311 and 5310 funds, they're only required to, or they only should report trips for the 5311. So we don't currently capture 5310 information. They're not required to report 5310 information into the NTD unless it is considered public transportation. So I sort of talked that around maybe a little bit awkwardly. Let me start one more time. You have to report all of your eligible public transportation to the NTD. So if the 5310 sponsored trips are considered public transportation, and this is by the definition that's included in legislation, I don't know it offhand to just read it straight out to you, but it's available in our policy manual. You can see if you have questions about whether or not your trip meets that definition, again, you can reach out to our help desk or your assigned analyst. You would include any of the trips that are public transportation. If you have 5310 trips that don't meet that bar, so they're sponsored with 5310 funds, but they are not considered public transportation, they don't meet that definition, you're not required, nor should you report them to the NTD. Anybody else want to help make that clearer? Okay.
Okay. Next question. Our transit service originates on our reservation. We provide transportations for students as public transit for another tribe's Public Law 100-297 grant school. can we include the Grant School along with the other two areas that are not served by that tribe on our Tier 3?
So there is a prohibition against school service. So basically school bus service is not considered public transportation. It's not reportable as such to us. So transit providers can't run school bus service directly. So if it's truly a school bus, it wouldn't be considered reportable public transportation. If it is students that are riding on their standard routes, so just, they open up or they extend that standard route to go to the school during the school year, and otherwise, this route is open to everyone else in the same way that that route is run throughout the year, then those may be reportable to the NTD. Did you want to clarify that further, Joe?
No, I think that's all accurate.
Yeah.
I mean, part of the question, I think, is just regarding the types of service you can report and the tribal areas that you can get credit for in terms of where you operate. One addition to Maggie's answer is we source our data from the Census Bureau's American Community Survey. So the reservations listed in the NTD are coming from that survey, and so we'll have the tribal area there if it is recognized by the Census Bureau, and if not, you can contact us about it. I encourage you to.
Okay, I got from that school bus service, which is not considered public transportation, is not reportable to the NTD, but if students are riding on a standard fixed route, so they can go to school with regular passengers, it is reportable? Okay. All right, next question. Our county commissioner approved a free ride to medical care voucher program to be used on our transit system. No money is paid for the vouchers. Our transit just absorbs the cost. Do we count those riders since there is no fare cost? It's a free ride to medical care voucher program.
Yeah, so generally voucher programs are not considered public transportation. We get this question a lot in the context of demand response taxi mode. But if they are just general riders that are using passes, for instance, that are part of your normal public transit system operation, and not necessarily exclusively using vouchers for this program, then yes, you would consider them just as you would another unlinked passenger trip. I think that was the question. If there was more to it, please let us know.
Okay. Do FTA sub-recipients have to report leased facilities in their TAM reporting?
So they do if they have capital replacement responsibility, if it's an administrative or maintenance facility. If they don't, so essentially if they're leasing it and they are not responsible for any of the major repairs, that's all included just in their rental payment or their lease payment for the facility. So they're not making any decisions about when capital replacement activities are taking place, or they're not directly paying for those and funding them out of their operating budget beyond the cost of the rental. Then they would not be considered to have capital replacement responsibility. They wouldn't have to include it. If the leased facility is a passenger facility, they would still be required to inventory it. Again, the same rules would apply. It would depend on whether or not they would meet that capital replacement responsibility threshold for whether or not they would have to do a condition assessment of it. If they do not have capital replacement responsibility, they wouldn't have to do the condition assessment. They would only inventory it. If they do have capital replacement responsibility, they would both inventory it and provide a condition assessment.
Okay. Next question. Okay, can 5310 providers refuse public transportation and only allow and prioritize their clientele? I believe they shouldn't refuse public transportation if they want to. I don't know if that's an NTD question or not. I think that's a little outside the scope of NTD.
Yeah, so there is client-based service that is funded with 5310 funds within the authorizing legislation of 5310, the 5310 program. Those trips would not be reportable to the NTD as public transportation service, but depending on how they're using the funds, how they're receiving the funds, there are some client-based services that they can, you know, prioritize using 5310 funds for. Again, it just would mean that it wouldn't be considered public transportation. It wouldn't be reportable to us to generate in the 5311 formula.
Okay. All righty. I think we're at the end of the typed in questions. Now let me see, there's some people with hands raised, and let's see how we can unmute. I unmuted Kenneth Becker. Kenneth, are you on?
I'm on. I don't have a question at this time.
Okay, then there was somebody else whose hand just went down. So I don't think there's anybody else with hands raised. Does anybody else have a question they want to either ask in the chat or ask verbally?
While we're waiting, I just wanted to clarify I think my answer to donations, or the question about donations earlier didn't really address the question. So this year we did clarify that donations made on a revenue vehicle or at a fare box should be reported as fares. And I hope that answers the question.
Okay. All right. I'll turn it back to Robin, who will be able to thank everybody and wrap things. Oh wait, we just got one more question. Once a report is submitted, then sent back with issues, how long does an agency have to resubmit the report?
For a state DOT, it's 3 weeks, and that's kind of built into the reporting system. We'll have our standard timeline depending on the revision. You can always consult your NTD analyst that you work with. For reduced reporters and tribes, and basically all other reporter types, it's 2 weeks to submit the first revision to the report.
Well, thanks everyone. This has been really a productive webinar. I've learned some things here, and I think that having people send in questions before and really put questions to the chat box has given us a really good range of the intricacies that people run into when they start trying to get the right numbers on the paper. So thank you, Maggie, Murtaza, and Joe, and Kara as well for really making this thoughtful and usable. RTAP will post this on the web on our YouTube site, and is that like within the next week and a half, Kara?
I'll try to get some stuff up today, and the rest of it will be within a week or so.
Super. Well, thanks again, and please let us know if there's other things that you would like to have webinars on. Thank you very much, Maggie and Murtaza and Joe. Bye.
Thanks.
Thank you. Have a good day, everybody.